Here is a quick review of unearned revenue. So, for this example, you're trying to sell season ticket packages. The cost is $50 a package, and each person gets 5 games in each package. 10,000 packages have been sold. So immediately you want to make sure you're calculating the correct number of tickets and the price sold. So if there are 5 games per package, there's really going to be 50,000 tickets to individual games. But it's also $50 per package. So that could be $10 per game or $50 per package with 10,000 packages. Either way, if you calculate out that it's $10 per game and you have 5 games per package and you have 10,000 packages, you end up with $50,000 of cash that's received. Or you can calculate out that it's $50 per package times the 10,000 packages. And you still end up with the $50,000 in cash that was received. So before you go and put your entry, think about what you've received. You've received $50,000. What have you exchanged for it? It's not revenue, the games haven't been played. It's unearned revenue because you owe these individuals their seats in that arena for those games. So you're going to debit cash for the cash received, but you're going to credit an unearned revenue account, which is a liability for the fact that you owe these individual tickets. And that's what you have here. The asset cash is debited for $500,000, and unearned sales revenue is the account name for the liability. The revenue hasn't been earned yet. As the games are played, we're going to take it out of the liability and we're going to earn that revenue. Once we sell a ticket, it doesn't matter if a person shows up for a game or doesn't. We've still earned that money because we've played the game. We've provided people with their seats. Whether or not they take them is not our problem. They've got to get there or not get there. It's their choice, but we've earned our revenue. And if we think about it, of the 5 home games, just in a simple way, it's going to be, we earn $100,000 for every game played. We would reduce that liability, so we should debit the unearned sales revenue for $100,000 per game, and then that amount has become to earned income. So we should credit the sales revenue. And that's exactly what we do after each game. By the time the 5th game is played, we no longer have unearned sales revenue, but we no longer owe anybody tickets or seats. We have collected all the cash and earned all the income. So our cash has been reported because that was received first, and after each game we've earned our revenue. So now our sales revenue at the end of the season is going to be $500,000, and the liability unearned sales revenue is now 0 because we have actually given the opportunity for those individuals to have those seats. So we no longer have the liability and we have earned the income. And that is a quick review of unearned revenue and the adjusting entries to transfer that revenue into earned revenue.